All right, guys. Good morning. Hope everybody's doing well. So, pretty important number, and let me talk about it just here in a second. I'm just getting everything situated over here. Sorry, I got up extra early today to do a meeting, so we are working with Pepperstone, and like I said on the F.A.C.E webinar, they're in Australia, and between the guys in Greece, myself here, I had to get up at like 3 o'clock in the morning, and it's like 9 o'clock at night there in Melbourne, and Greece, they're middle of the afternoon. So it's like one of those things when you work with guys on the other side of the country or other side of the world, excuse me, it's tough getting everybody up at the same time. Ooh, I'm so sorry. This tough. I didn't mean to do that. Getting everybody in front of the computer at the same time. Anyway, okay. So let's talk a little bit about. You might have just saw me putting in this alarm on the VIX. One of the things I want to point out is volatility dropped following that data. Obviously, what had happened today is, the inflation data was weak, as you guys have seen. And, I want to actually show you. Okay, so let's. So here is the. Actually, you know what? I'm going to pull up Forex Factory really quick. This is visually, this is a easier chart for me to look at. Let's pull up the CPI, and as you can see, month over month, we came in line. But let's go to core. So core came in a little bit less than expected, and the market ran with the core number. But I'm going to say that data shouldn't really change your picture of what happened or how to view the markets at this point. What I think right now is happening is the market was positioned for some stronger inflation data. It basically came in, if you will, in line. If you look at like the inflation data that came out, year over year, CPI actually came in a little higher, but really it's all the core numbers came in, pretty much in line. But the market was hoping for some really strong data, like across the board. So you didn't get it. You got a little bit of an unwind in positioning. The positioning that we see unwinding, predominantly is going to be the dollar. So, the dollar, you had it poised right up against its highs. And I think a lot of people were just ready for it to break out. It didn't. And so you got some profit taking. But like I just mentioned, I don't think this should change your view of the dollar. I pulled the dollar, my dollar trades off, but I'm also reestablishing dollar longs down here. So that's the other thing I want you guys to think about. And I don't have any problem with that, because I was just showing you the VIX. So volatility daily sentiment index, if you didn't catch this yesterday, the DSI came in at 10. And let me just show you really quick. Here's the chat room. Let's go to news and research. Let's go over to files list. Here's the DSI from yesterday. So NASDAQ's at 87, volatility is at 10. Those are extreme, right? Volatility could close below 10, could be at maybe 9 today. It's possible. But when you get to the single digit midget numbers, you can't be like, I would not, there's no way I'd be short volatility right now. No way. And what I think might actually happen is, as stocks go into new all-time highs today, okay, as we have, I think we're gonna do one of these like we have been doing. I mean, it's consistent, right? You hit a new high, what happens? Fall. You hit a new high, you fall. You hit a new high, you fall. Right? You hit a new high, you fall. You hit a new high, you know, you hit a new high, you fall, right? It's part of being in a wedge, right? So I'm not, especially with volatility as low as it is, the daily sentiment index for the Nasdaq's pretty high. I wouldn't be surprised if the rally today fails. Now, does that mean, does that mean the stock market is bearish, a big bearish reversal? Not necessarily, but I don't think you should be chasing stocks higher either. And I think that if volatility starts to rise and the stock market falls a little bit, you're going to see the dollar recover. Now, let me grab the bias chart really quick. Okay. So what's really important right now? Well, 117.50 in the euro. By the way, gold 1750 is important. It's bearish while we're still below 1750, by the way. So let's go to the euro. So as I mentioned to you guys during the FA.C.E webinar this morning, like, look, we got to get above 117.50 in order for us to start squeezing. We spiked up to 117.49 and came off right there and came off. Now, I do think that 117 is a huge support for the euro dollar. So let's write that down. Now, you may be looking at the hold on really quick. You may be looking at the euro dollar and thinking, oh, I'm long the euro. I'm out of the woods. That was weak data. Stocks are hitting all-time highs. I should be long the euro. I don't think I would be convinced about the euro reversing until we get it solidly above 117.50. We closed the day above 117.50. I'd be comfortable with being long euros. And to be perfectly frank with you, I probably will get long euros if we close the day above 117.50. But shy of that, I would think that after today's reaction to the data and stocks at all-time highs, if I was long the euro, I'd be questioning why aren't we above 117.50 right now? That would be my opinion. Sterling, I scalped this long just as we got off the webinar. I closed out my Norway trade, Mexican peso. I bought the sterling right here at 40. I sold it for a quick 14 pips, I think. And I didn't capture the high. I was just playing the flag, as I told you guys I was, during the webinar I was going to. But I can't get really bullish until we get above 139. So notice I'm keeping the euro on range, and the sterling 130. Well, I guess we need to write 138 because that the low today was 138.02. So 138 is really key support. And if we break above 139, we can actually turn bullish, because then we'd have a bull flag pattern, right? Really, we should clear 140, but Aussie. Yeah, Aussie, we've seen a little bit of recovery, but here's the 618 retracement right here. So I'm going to write down 73.85. Whoa, what is that? Hold on. That thing keeps going off. So I'm assuming there is some alarm Oh, maybe there isn't. Okay. Somebody just keeps setting alarms on that. I'm assuming would be Amanda. She uses our alarms right here. And even though she's supposed to be on vacation, she's probably trading too. Okay. That is key. And we have to stay bearish while we're below 74.20. Guys, just don't forget, this is a flag pattern. I know we're getting a recovery right now, as we should. Look, stocks are all at all-time highs. Yeah, we should recover a little bit. But, you know, until we get above 74.20, I can't be bullish right here. This is a 618 retracement too. Somebody just asked me in the chat room, like, how far do you think the euro is going to go today? I said, this is about 30 minutes ago. I'm like, 73.85. This is 618. It's important. So support is 73.20, which is flag support. Kiwi. 69, 58, 71. We are range bound. Nothing's changed there. Dollar Canadian. Dollar Canadian, you know, I tried playing it long yesterday. I bought it at 30. Shoot, what did I buy it at? I bought it at 30. 31, I think, yesterday, somewhere around here. I bought it, you know, bought it somewhere around here, like 31, and I sold it last night at like, I think I bought it like right here on this dip at 31, and then anyway, I sold it at like, or 35, and I sold it at like 21, something like that. I lost like 15 pips. Anyway, the dollar Canadian, I have to point out, still trading heavy. And, you know, so obviously this this resistance right here is very key. But then again, support right here is key. So I'm going to say, while we're trading in this range, there is zero reason to be trading the dollar Canadian unless you're trading it as a range, right? So support being 24.25, resistance being basically 126. I'm going to leave it in range, and you guys just be really careful because we happen to be in smack dab in the middle of the range right now, right? Okay. Dollar Swiss, big rejection of this resistance. So that's 92.35. I know we went up a little bit higher than that, but I think that's anybody who's long will be happy if they gets back up there, I think. Any dip back down to 91.60 should be very well supported. Actually, I would actually venture to guess 91.70 would be very well supported. Okay. Dollar yen. Oops, sorry, dollar Norway. So as I was saying in the chat room, I think we're going to come back down here to 885. I took my US dollar Norwegian krona long off right here at 890, but from 876 or wherever I was long, I'm going to be buying it on dips here. So just so you guys know, I think today support for US dollar Norwegian krona is 885. Resistance is 896. Right, 896, and we have to remain bullish while we're above 870. I know when you see moves like you saw today, you're like, wow, how can you be bullish? Remember, this is a big accumulation pattern. The trend is higher. While we're above here, the trend remains higher. This is higher. yes, it's, under pressure today because there was CPI data that came out, but you want to be able to be buying it on dips. So look for levels to be a dip buyer, right? Okay. Dollar max. So I sold out of this one too. Got to continue to play the range. By the way, the 200-day moving average held yesterday. That was that capped us yesterday. So 2025, 1980. We're probably going to find support ahead of that. And I would go so far to say that it's 2015 because that's the 200-day moving average. Leave us in range. Dollar yen, big rejection up here. So I'll mark up today's highs at 110.80. That's today's highs. We're going to leave it in range. Support will be back down here at 109.90. Right there. So what I figure is going to happen is we're going to do something like this. Right? Dollar index. So I'm going to get rid of this. Let's get rid of this. Let's just move that too, because we're obviously not breaking out today. Possible double top setting up. So what that really means is 93.20 is really key, right? I want to put us on bullish, but I'm not going to put it on bullish until we get above this resistance right now. 38% retracement comes in at 92.64. I think this dip will hold. So $92.64. Okay. Gold. Support. Forget that spike low. Be right here. 17. Well, I guess we'll write 1720. 1750 is resistance. Whoops. Right here. It's actually 17. I know I have it written as 1750, but we're going to actually write down 1755. Okay. While we're below that, I mean, I have to imagine that after today's price action, how many people went, wait a second. How come gold isn't like, how come we haven't recovered all this yet? I know they're thinking, they're like, well, I'm just going to hold, we're going to do it eventually. I just got to be patient. But the fact of the matter is gold and silver didn't bounce too much. So while silver is below 24, I still think the risk is lower. So right now, 23.15 is support. 24 is resistance. That's going to be key. And we have to remain bearish, these precious metals. Bitcoin. Resistance is 48.2. It's bullish. While we're above basically right there, 42.5. You guys know that because the numbers have stayed the same forever. 42,500. S&P is bullish. Oh, S&P is pulling back. Oh, look now. Oh. Where the hell? Okay. That's weird. The S&P hits a new high and reverses. We'll see if we can make it up to 44.60 today. That'd be this upper trend line. Support is obviously 43.80, 75, 43.75, 43.75. It's key. Below that is 43.20. Actually, this is critical. 40. This is, you know, the wedge support, right? It's here. Actually, if we came down immediately, it'd be 43. Shoot. This is like more like 43.50 now. Resistance, what do we write? 44.60. Then 44.95. Okay. All right. Bias chart is finished. It is done. Stelios, did you want this anymore?
I've got it. Thank you.
Okay. Steve, Stel, how are you guys doing?
Good, mate.
Very
How have you
good.
been?
I'm tired. That extra half an hour I could have got that I lost sleep today.
Yeah,
I'm
it
gonna be
counts.
yawning all day.
It counts.
It does count. It does count. Anyway, I'm going to pass it over to you guys. It's raining over here. We will take
Really?
all the rain. Yeah, we're in monsoon season. So this month is the month that we usually get a lot of rain, but we
Okay.
need it more than anything right now.
Obviously, yes.
Yeah, we do. So I'll take it. All right, guys. Good luck, everybody. I'll see you in the chat room, and I'll also see you at the daily roundup here in just a few hours. So, all right.
Thank
Thanks,
you, mate.
everybody.
Thank you,
Right.
Blake.
Thanks,
Bye-bye,
guys.
mate.
Okay. Hold on. Let me post that. Yes. Okay. So the reaction following the data was stocks to rally. Surprise, surprise. Well, the funny thing is we talk about it every day and we mention that it's going to happen and it keeps happening. The dollar is weakening a little bit. Stocks are rallying. Metals are trying to recover. I'm still not convinced. Everybody knows I'm very, very bullish in the medium term, but I'm still not convinced by their move following the flash crash. And I still think we have one more low before we really march higher. So I'm waiting. I'm still waiting. The other thing which is really impressing me is the Bund. And the Bund has been very resilient comparing to the treasuries, for example. I still think we'll see 178 before we go lower. And that's where my trigger is for another short. I know Blake has a pattern in play short already at 177.4 or what was it? I don't remember, which is good, but I missed that. I'm still waiting. But overall,
10-year yields have broken through the
yes.
First resistance area, by the way.
Yes, you were showing that rectangle before, and it's out. Really, the main one is that, big confluence of that, the blue zone that you have and the descending channel. Where does that come in at? I can't see. I need my glasses. It's 130,
140.
40.
The resistance, you mean 145?
Yeah, 145. Okay. So until that's broken, maybe in the short term it goes a little bit higher, but until that's broken, I'm not. I don't see any change, any major changes, basically, in my view. Cryptos are doing well today. So, I mean, that false breakdown in Bitcoin was very impressive, and it's just gone straight up, and all the altcoins are going even further. Ethereum is up 3% today. It's just, as the dollar weakens and risk goes higher, they're going to go higher. I mean, that's the pattern of the past weeks and months, and I don't see that reversing. Currency-wise, we talked about the euro, the dollar in general. I like euro sterling, just like I said on F.A.C.E. I still think it has one more little leg lower to go to 73s, and then I'm going to get long that. But otherwise, I don't see anything that jumps out at me that I need to talk about. So I don't know if you have something to show, or we go to questions straight away, whatever you want, Steve.
Yeah, absolutely. So following the inflation data, which inflation remains extremely strong. I mean, without a doubt, we are still at 13-year highs comfortably. We're seeing this little this little pullback in yields. This little pullback so far in the DXY. Speaking of which, DXY for the time being is getting rejected from this symmetrical triangle trendline resistance. I'm not saying that it can't break out. It definitely can, but for the time being, it keeps finding resistance on top of this key area. RSI finding resistance in an equivalent trend line as well, by the way. And as we're seeing this, we have, for example, the Aussie, which I was watching before, that is making an attempt to break higher from this little descending channel residing within the bigger descending channel. I still think that commodity currencies pullbacks seem very corrective in nature, be it Aussie, be it Kiwi, be it any of them. So, I remain very much unconvinced about the nature of the dollar rebound. I think that it's extremely likely that it's part of a correction, and with corrective moves they can end at any given point, right? Because they're not the main move. So that keeps me extremely skeptical in trying to trade the other side for the dollar. Having said that, yes, there is the possibility of a little bit of a bigger rebound. As we said before, and as you mentioned, Stelio, equities just don't care about any of that. I mean, I'm pretty sure that if inflation was strong, they might have even found an excuse to be well bid, irrespective of that. Yeah, I know somebody will say here, for example, that but if inflation was even stronger than expected, then the fears for tapering would be increasing, and that might have turned stocks lower. Something, I've seen stocks rally in days that data are not supporting any type of a rally so many times lately that I'm not sure about that. I'm not saying it's unlikely, but I'm saying I'm not sure about it in any case, because things that are happening are pretty weird. There seems to be like a big audience, a big following in stocks of people that really don't care, or are convinced that they shouldn't care, or they do care, but they still think that unless they follow equities higher, they have no other means of making a return, that they just keep blindly bidding them. At least the few big companies that comprise a big percentage of these indices and are responsible for the vast majority of the gains we have been seeing. Now, this little stall in yields for the time being, which of course is extremely temporary for the time being, is also capping USD yen for the time being. But as far as I'm concerned, I think this thing has broken out, right? From a technical perspective, this seemed to be like a nice orderly created channel, and we have broken above it, and having broken above it, a little bit of a pullback within the day doesn't really change the technical picture. So, I need to see a lot more to be convinced that USD yen is not moving higher, and yields might not be moving higher. And somebody's going to say, but if yields are moving higher, then why are you so skeptical about the dollar in general? And I've explained the reason multiple times in the past, because simply real rates are extremely negative, and the market is still not pricing that in, because the market perversely seems to be pricing in that yes, real yields are extremely negative at the moment, but the Fed is going to make sure that they don't stay that negative.
Negative real yields are transitory.
Yeah, exactly. That's so negative. At least real yields are transitory, and we're going to.
I mean, that's the thing that worries me. Well, not worries me in the medium term, but in the short term, any like metals bull looking at real yields at such record negative levels. I mean, if you had shown me these real yields levels and told me where do you think gold is, I would have said 3,000. Something like that. So,
and you would be right. I mean, that would have been a logical assumption to make, right?
Yeah.
Now, there are two ways to read into this, right? One, there is an inherent, very, very, very bearish environment in metals, depicted by the fact that they fail to rally even under such fertile ground and environment for them to flourish, right? That's one interpretation. There is the other interpretation that the market is still believing that this situation will come under control, very fast. So they shouldn't be like following precious metals higher because they can soon find themselves being in the wrong side of the market. I've said this long before we saw this type of underperformance, that I strongly believed, because I've seen it happening multiple times in the past, not for any other reason. It's not that I'm some kind of a prophet, that the market is going to once again falsely believe that the Fed has things under control until it gets proven that the Fed has nothing under control. And the Fed is following the only avenue they can be following, because they can't acknowledge inflation being a problem, because they have no tools to fight it. And when I say they have no tools to fight it, I don't mean that they actually have no tools to fight it. Fighting inflation is extremely, extremely easy. There is one big problem with it, though, that you have to have the political will to tank the market for it. Because when you have a market that's being built almost exclusively on monetary easing, cheap money, and artificial support, once you take that punch bowl away, you know what's going to happen. They know what's going to happen, right? So yes, it's extremely easy. They do have the tools for them to fight inflation. Contracting monetary supply, increasing yields is something you can literally do overnight. And the market, we've seen that in the 80s, is going to respond to it accordingly. But the market is not going to respond to it accordingly, only having to do with inflation. It will have to respond to it accordingly, having to do with valuations, asset prices, expectations, bursting of bubbles, so on and so forth. And they have absolutely no political will to do that. We know that, we've seen that. They've in essence acknowledged that multiple times, directly or indirectly in the past, right? So yes, the Fed does have the tools to fight inflation, but the Fed has zero willingness and is extremely unlikely to do so. So they're pretending like they can and that they will fight inflation. And the only thing they're actually willing to do is keep moving the goalposts about what are the levels that they're willing to do something about. Hoping and crossing the fingers that the problem is going to go away before they actually have to move the goalpost so many times that even the most naive market participant is going to realize that, yes, okay, fine. The Fed has absolutely no willingness to do something about it. I'd better load up the boat with anything that is a proper, real, and proven inflation hedge. Anyhow, enough with the rant.
We keep saying this all the time, but yeah. Anyway.
Yeah.
Yeah.
So having to do with precious metals. Indecision day yesterday in gold, a doji. Indecision yesterday in silver, a pin bar. So far a little bit higher in gold, silver not so much. As I've said the other day, there is a chance that the markets found tradable lows with these type of aggressive, uncalled for sell-offs. But we need to see more to prove it, because I'm not really anxious or eager to necessarily jump on the long side, because I know that once these moves start unfolding, there's going to be so much more to them that trying to catch the bottom is not really necessary in any way. In any case, we're still holding this channel trend line support in gold. We're still holding above this confluence of supports at $23 in the case of silver. And until proven otherwise, technically speaking, the path of least resistance remains lower in the short term, because due to fundamentals, the path of least resistance in the medium to long term remains higher without a single doubt. But nothing has, substantially changed since yesterday. Same applies to crude oil. Crude oil had a very decent day yesterday to the upside. So far, somewhat under pressure today, but still hasn't even broken through the symmetrical triangle. I still think we are unfolding some kind of a corrective move, as we're probably doing here in natural gas. But I think both of them remain very, very bullish. And once these moves finish unfolding, in the case of natural gas, this might be a very, very short-lived move. In the case of crude oil, there is a chance that this move is a little bit, might take a little bit more time to unfold. I think that we're going to continue higher, and that we probably have a decent amount of room to move to the upside. Now, having to do with equities, other than what I said before, I have really nothing to add. Upside targets remain exactly what they were according to what we know so far. 4,500 roughly is the next upside target of within this ascending wedge in the case of the S&P. In the case of the Nasdaq, 15,600 is the next upside target. Seems to slightly be underperforming as we speak. Nothing spectacular. In the case of the DAX, 16,000 is the next upside target. And yeah, until proven otherwise, it's really, really hard to try to fade these moves. Yes, there are divergences, so on and so forth. You can make an argument about the DSI in the VIX, the DSI in indices themselves, the RSIs, the blah, blah, blah. Yeah, but, who knows when all these are going to play out? Might be in 5 days from now, might be in 2 weeks from now, whatever. Pretty sure, though, these type of moves unfold usually a little bit violently. Usually the counter trend moves tend to be a lot more volatile than the moves in the direction of the trend under such conditions. So pretty sure, we're going to realize when something is happening, because we should have like a pretty negative day. Anyhow, not much to add. If we do see some follow through to the post-inflation data today, we might have more of a technical development in the markets to talk about tomorrow. So I'll be more than happy to answer any questions you might have, guys. Gary says, I like to hear your answer. Thank you. Right on, got the same plan on the cable. I missed your comments on Aussie. Could you go over it again? Yeah, absolutely. I'm monitoring the little channel within the bigger channel in the Aussie, right? We're currently testing resistance for the second time in 4 trading days. If we break above it, we open the room for more upside within this larger channel you see in blue, right? So basically against like 72.50, which is where currently the trend line support passes from, being long Aussie makes sense, right? We break through this little channel, we open the door for the next upside target, which is the 76 cents area where the 200 DMA is, right? If you look at the Kiwi, you'll see that the picture is equivalent. We have this bigger corrective channel depicted here in green, right? We've already broken out from this little descending channel, but conservatively bullish you can be, but in order for us to be like more bullish, we need to break through 72. 72 is a confluence of resistances. I think we break through 72, we can be more confident that we've seen a low in the Kiwi and we're headed higher. Question about ZM, which is Zoom, right? Zoom still, consolidating, right? Actually, probably this is how I should do things here. Yeah, I think that this correction, this move has clearly corrected characteristics. But we haven't convincingly broken out yet. It seems to me that we're going to resume higher now. I have no idea what the catalyst is going to be, but the market is reluctant to do so yet. So I think more patience is required here. My pleasure, Lorraine. So yeah, that's what I think about Zoom. By the way, I logged in late to the webinar just before Blake finished. So if you posted any questions for me earlier than that, please make sure you repost it because you can see questions that were there before.
I don't see any. I was here from the beginning. I don't see any. Actually, no, there's one in the Q&A. No, that's fine.
Okay. Bitcoin. Sure. Let's have a look at the cryptos. At both the cryptos. So Ethereum currently trading in a more bullish manner than Bitcoin is. And it's currently approaching the 61.8% fib at 33.69, 33.70, let's say. Quite a powerful move to the upside. We've started seeing some RSI divergence here. So I have to tell you that even if you want to follow this bullish move to the upside, right, I wouldn't be doing so now. I think if you want to be on the long side, you should wait for a pullback, which shouldn't take long to unfold, right? Same thing with Bitcoin. At least a pullback back to 42,000 is going to be a much better opportunity. You see the RSI divergence between the previous high that we found there and this high that we found here for the time being at the 50% fib and previous low over there. So I would be careful. I would not be chasing this move higher. If you want to join the bulls, I think you need to wait for a pullback towards 42,000 to get a better level to do so. KO, knockout. Is this
Coca-Cola?
Is this the KO you want, the Coca-Cola company? I see. Yes. Okay. I see. We haven't had a look at it for quite some time. But really, if you notice, nothing has changed, right? And a lot of things are worrying about this chart. Starting from the prolonged RSI divergence that dates back to the pre-COVID highs. Continuing with the fact that so many stocks have rallied, broken through the pre-COVID highs and even accelerated higher, producing a huge return above it, while Coca-Cola, from what you notice, has spent all this time recovering higher, undoubtedly, but in a manner that has no impulsive characteristics, hasn't reclaimed the previous high, and has been diverging in momentum since then. Bottom line, I would be very, very careful with this because it looks like that once things go bad for any number of reasons in the stock market and we get a corrective move lower, this stock is positioned in a way that can really crap the bed, right? So yeah, I would be very, very careful and I would be very reluctant in buying this, right? So yeah, that's what I think about it. Uh, Yield is it the one is it this one? Amira, is this the one? I assume it is because I see we've had a look at it recently. Yeah, testing resistance once again. It seems like it wants to break out, right? Now we also have earnings out of the way. Earnings did produce a negative reaction, which was short-lived. So especially seeing the behavior post-earnings, I think there is a very, very good chance that we are about to break higher. And I think you should respect this. I think you should respect this type of technical development, seeing this type of a consolidation we had within this triangle. And if this happens, which is, I think, a very high probability scenario, I think you should look towards these upside targets to begin with, right? I should also add the 200, the 2 target, which is the 100% extension of the triangle's range at 75. So yeah, I think these are doable upside targets in this case, right? So I think it looks good. We break higher. I think you should, yeah, trust it as probably a valid technical development and not try to fade it. Anything else, guys, girls? MU.
Manchester United. No, that's not. It's Micron.
No,
isn't
that's
it?
Micron Technologies.
Yeah,
Yes.
I know.
Okay, last time we had a look at it, we drew this from what I see, and it seems to be playing out nicely so far. So yeah, I don't have something to add to the drawing. We're still within this corrective channel. We can see lower prices while within it. But it seems likely to me that the eventual breakout is probably going to be to the upside, right? Tesla. Yeah, I'm very skeptical about this move in Tesla. Somebody can make the argument that we've broken out from there, and yeah, it hasn't done anything wrong yet. But yeah, this move higher is pretty unconvincing for the time being. So I think there is also the possibility that we're still within some kind of a larger corrective pattern. So bottom line, I wouldn't be doing anything with it. I can tell you that 780 is a key area of resistance. If we break through 7080, most probably we're headed to new highs. But against 780, I wouldn't blame anybody for even being short. You know what I mean? I think that's a major pivot area. And, there is a valid argument to be short against it if you want to read the market in this type of way. Snap. Yeah, I think this has broken out, right? From this symmetrical triangle. Yeah, it has broken out. It had this on earnings, this runaway gap. And it seems to be coiling, probably heading higher from here towards 90. So yeah, I think Snap has broken out and you should probably keep looking higher towards 90. Anything else? Triple D. D. Let's see. Haven't had a look at this for quite some time. Let's see. Probably what is starting to appear here is some kind of a bigger pattern, most likely. So I would caution with patience here also. Yeah, not easy to trade. this market, right? You can see why. Not an easy market to trade for the time being. I think you should remain neutral for the time being. Earnings caused this jump higher, but look how this trend line rejected us for the time being, and there was no other follow through yesterday, right? So I think this is a market that's still coiling and still undecided. But yeah, there's a decent chance it can break to the upside, given the prior move, but it hasn't done so yet. So I think neutral for the time being, and with chances being better in a bullish breakout. That's what I think about Triple D. Coinbase, yeah. To begin with, I don't like assets that have very little history of price action, right? For obvious reasons. Having said that, I think this is a bullish breakout from this rectangle, right? With the width of the formation pointing to 300. So technically speaking, for the time being, this is your next target and the next obstacle for the bulls to take out, right? There you go. MP, what's that? Members of Parliament. Yeah, this is what this is. Seems we have had a look at it. Yeah. Listen, it did break out as expected. But the nature of this move higher is still not convincing me. And there is still a chance that we are within some kind of a more complex correction. Watch the 41 area. Nice confluence of resistances. As long as we trade above this trend line, yeah, we're bullish. But I would like to see something different than what I'm seeing for the time being. This type of a move higher, this RSI divergence, yeah, not what I would want to see, right? If I was long, I would still be holding my position, but it would be a position I would be closely monitoring, you know what I mean? Because it can actually fail easily from what I see here. So far, this move higher is, not unfolding as an impulsive one. Might develop into one, but for the time being, it's not. Okay.
Excellent. Well done,
That's
Steve.
it for today's.
Thank you, everybody. And
bye-bye, guys. Bye-bye still.
Tomorrow.
Bye-bye, girls.
Bye-bye.
See you tomorrow. Bye.